following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Hold on one second here. We are getting ready to start the show, and my alerts are going off. Hold on one more time. We're still making new lows in gold and silver, folks. That's the reason for the alerts going off. I wanted to go through that to show you where we are in those longer term charts. But before we get to that, just give me 1 second here, and then I will be able to turn this off because they don't stop beeping until I turn off the old alert. Okay, let's take a look to start out the show with the German DAX. You'll see that this market has been in this really tight parallel channel for the past 6 or 8 weeks. We've touched it 3 times now. We could easily turn and go above that. We have a situation going on in the Federal Reserve where they keep pumping money into our system. Our good friend Shane Smolian was kind enough to send on his chart on the Fed, how they're juicing the market, and I wanted to let you see, because these are all-time records again, folks. They just keep pumping money into this thing, and I don't know when it's going to stop, but I don't think it's going to be pretty when it finally does. They're saying that some of these numbers that we're looking at, I mean, $4.2 trillion, in the last 5 years, and money supply coming in. Wow, this is just, back in the old days, gold would be selling for $2,500 an ounce, but we live in different times this time, so we'll have to just see how that goes. Okay, the first question that was posed to me several times yesterday was the chart of Twitter, and I wanted to just, show you what's happening with Twitter. This was the chart there we go again, off base one more time. Hold on. Okay, here we go. This is the chart of Twitter going back over the past 9 months. As you can see, the ABCD patterns were, very, very distinct. You'll notice that the one that we had back on the 28th of July, that was a perfect 61% retracement pullback, and the market went from 116 to 121, and then it pulled back one more time, and then finally made the ABCD pattern to the upside. Now we have some proof that ABCD pattern was actually a really good pattern, and the way we do that is we go to the weekly chart, and when you see the chart of Twitter here, you'll notice that from the 2014 high, that was right after the initial IPO. It came out went from 41 to 73, and then it went from 73 down to 14 and change, and that was a 1.618 expansion. As you can see here, it was a perfect ABCD pattern. But the important thing that I wanted to mention here, you'll notice that the high that we made yesterday in Twitter was a 61% retracement of the high that we made in October of 2015. So this was a logical place to think that this would be the spot where Twitter would have some problems. What's amazing to me is the stock closes at 25 and change, and then overnight there's a report that comes out and says that Google, Facebook, and what's the other one? Google, Facebook, and Disney have reported to pull out of the buying talks. Now, how does all 3 companies come together at the same time to one reporter and tell them that they're not going to be in the thing? Something smells here, folks. This is almost like the thing with the Chipotle Mexican grill. I don't know how these things happen, but boy, it certainly looks like something that is very, very suspicious. Now, we're going to have our good friend from Astro Trend. Norm Winsky is going to be on the show today, and we'll have him on in about 20 minutes. The next thing we want to look at now is to take a long-term picture in this gold. As you recall, those of you that watch the show regularly or receive the newsletter, you'll notice that we were talking about this potential failure because it looks so ominous. The fact that we had this incredible rally that we went from 1309 up to 1360 in a matter of 3 days, and then we gave it all back, and then we started to making higher bottoms, but each of the tops were lower. The problem was after we made that 37-day low way back in December when we made the 3 drive to a bottom pattern, we took off like a rocket, and we're not doing that. We are just falling apart here. And so once it broke that 1309 level, that signaled that, we were most probably, heading down to a much, much lower level. If we look at this gold market, of course, on a weekly basis, you're going to see that here again, we did reach some major resistance up there at $1,384 an ounce. That was a 382 retracement of the high from 2011 when we hit 1932, and it was also a 1.618 expansion of the previous high from the April to May level that was happening there. Boy, something's going on today because the alerts are just jumping all over the place. Oh, here's one. This is a very interesting one right now. There you're going to see a little bit of Fibonacci at work right now. Folks, the British pound is setting at what we call the moment of truth here at 126.30. Once we broke the 127.40 level, like we mentioned yesterday in the show, we were most probably heading down to this next level, which is a 1.618 retracement of the last move. This is also important on the long-term weekly charts. Now, I noticed that the Chancellor of the Exchequer is in New York today, going to each of the banks, telling them how wonderful it's going to be with them exiting Brexit. Now, I don't know what he's doing there, but the fact that they had to send the big boss over to talk to the banks means that some people are getting a little bit nervous. I think they should go to Germany and get nervous over there because the Deutsche Bank chart is the one that looks the worst. I mean, we've had a 20% rally in Deutsche Bank, mainly short covering, but the stock still looks horrible. And I don't understand that one either. But anything below $11 a share in Deutsche Bank, and that's going to be sayonara. So watch this British pound that we're looking at right now at this 126.30 level. We're trading at 126.36 right now. We've actually come down very hard last night in the last several hours. Once we broke 127, it was easy to see that we were going to go down a minimum of 70 pips, and that's, of course, what we've done so far. So we want to watch this one for a day trade. If you follow the 1.618 number that we usually do when we're watching these patterns, that's your line of your last stand. This is where the wagons are being circled. So you don't have to risk very much here at all. 20 pips, roughly $120, is your maximum risk on this. But they do fail, so you've got to be able to discipline yourself to put a stop in. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, when we're talking about the British pound at 126.30, that's not a long-term position, folks. That's a scalp for a day trade. I mean, that's something you have somewhere potential of about $300, in other words, about 50 pip rally to 126.80 to 127 as a rally, but the downside risk is only $120. So you've got a 2-to-1 risk-reward ratio. That's just a scalp coming off the 1.618 number. That's the number that we know that if you get below that, there's nothing but air. And so also a vacuum. But, that's all that is. That is not a long-term prediction. I still believe we're going to hit that 125 to 124 level in the British pound sometime in the next week or two. Well, it could be today also, but that's the ultimate pattern down there is at 125 to 124.50, I believe, is the long-term pattern. Remember, the low in the British pound was at 85. That was back in February. In 1985. That's when we had the Plaza Accord. So let's try that again, Larry. In 1985, the pound hit 105, not 85. So in 1985, the pound was 105. So breaking below the 126 level sets up 125 to 125.40. So that's what we're looking at right now. Now, if we take a look at a really interesting chart today that I think you'll like to see because everybody's in the news all the time, and it was the only bank that prevented any of their employees to giving any money to the Republican National Committee for the election. They actually prohibited that's what they told them anyway, their employees could not give any money. That to me seems a little suspicious, but who knows. Anyway, you'll notice here that we have a 4-hour chart here in Goldman Sachs. You'll notice that we have this 135 pattern where you have lower tops. Each of the tops are symmetrical to the other. In other words, the time between 1 and 3 and 3 and 5 are equal. The 78% retracement from point 3 is equal to the 61% retracement from point 1. That comes in at this 166 level. So this is a very interesting spot to keep an eye on the chart of Goldman Sachs. So that's what we want to be watching here in this particular one. As we look along, the other things that we're watching, crude oil is is starting to break out to the upside in a small way. Just give me 1 second here. You'll notice that we are now trading above the 150 level. This has had a bullish bias for well, the last 8 or 9 days, because we'd made a Gartley down there at the 61% retracement at the 43.50 level. It actually missed the price by about 7 cents or $70, and now we are 7 handles higher, which is $7,000 when you look at the West Texas crude contract. So that's a pretty big move, and you can see here as we clear the 52 level, that sets us up another 8 or 9% higher up to the 127 expansion number, and also the larger ABCD pattern that would take you all the way up to 56. So the oil is still going higher. Folks, there's no reason to even think about selling oil, because we just had a $70 break in the gold market, a $10,000 break in the silver market, and oil and heating oil and gasoline didn't go down at all. In fact, they went up. I mean, when you have markets that will not go down with all the selling we're having in the metals markets, that's telling you that there's some real serious buying coming in here, because when prices of other commodities drops, and the other commodities go higher, that tells you that the people that are in the know in the oil market, and that's the one that really counts, it's telling you that the prices want to go higher. So until crude oil at least makes the next profit objective at 51.80, I don't see any reason why not to try to buy dips. And the dips are virtually nothing. They don't even back off $1 a barrel anymore. So we're losing, a little bit of volatility in the crude oil market, but it keeps, challenging and going higher and higher. But when it does turn over, it'll probably give us a good chance to take a look at it. But right now, there are not any patterns there that even remotely suggest that we're looking at a major top. That doesn't mean it can't happen in the next 10 minutes. All we're saying is that there's not a pattern associated, with it at this particular time. When you have something like Twitter, when you have a 61% retracement at $25 a share going back to the high of last year, and you have several ABCD patterns coming in there, that's a totally different picture. The only reason I bring this Twitter to your attention today was the fact that the news report came from a source. And how did he get the source? That all 3 companies, Google, Facebook, and Disney, all at the same time told this reporter, no, we're not interested anymore. Folks, this smells like dirty garbage. I mean, give me a break. I mean, there's not something right here. So all I did was I pulled up the chart to see what was going on. And at the same time, there were 3 analysts on Fast Money yesterday on CNBC. Of the 5 that were there, all 3 of them were incredibly bullish, Twitter, and saying this was going to be a monster buyout and everything. And it didn't go up. I mean, so that's no big deal. There's nothing wrong with that. I mean, people made a decision. I do this all the time. I make lots of mistakes, just like every trader does. But, when it happens, you've got to correct it. What I don't understand is how they came through with this report. And I'm sure the guy that did this was not short Twitter, but more news is going to come out on this, because to say that all 3 companies at the same time in the middle of the night decided that they were going to pull out doesn't make any sense to me at all. And so that's the bottom line of what I'm looking. Just like with the Chipotle Mexican Grill, why did only a few restaurants out of the hundreds and hundreds that they have any problems? That doesn't make any sense either. So, but that's my 2 cents worth. I'll get off of my soapbox and I'll move on here. We're going to have Norm Winsky on here in just a little bit. We've now hit 1255 in the gold. That is a $20 lower than the 61% retracement at of the last low that we had, the smaller low that came in at 1275, and we're starting to go lower. Folks, there's another market that's in deep trouble too, and that is the Treasury bond market. Treasury notes and bonds are going higher, regardless of what they're telling you at the Fed and other places like this. This is not what's going on. The notes and bonds are going down. That means interest rates are going up. And that's that's different than what they're telling us in the news. So keep an eye on that. And the other one that's really interesting is the high grade bonds, the high yield bonds, the junk bonds. They've been going up during this move here. So, people are in search of a higher yield, not even worrying about anything about the quality of what they're buying. And that's another situation looks really interesting. These things are adding up that there's going to be, as they say in the trade, all hell to pay if this stuff doesn't work itself out easily. And I'm not sure it's going to do that. Remember, we had Bill Meridian on yesterday, and he said that October is the cruelest month, both for the longs and the shorts. So we want to pay attention to this very closely. One of the things that Bill stressed yesterday is to watch for a potential bottom, possibly a big sell-off bottom around the 11th to the 16th of October. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our good friend, I believe, Norm Winsky from Astro 10's on the line. Norm,
yes,
are you there,
Larry,
my friend?
Good morning.
Oh, good morning. I'm ready with page 1 if you want to start right now.
I'm good to go. We're gonna share some of my top forecasting tools I'm gonna concentrate mostly on the stock market this month because okay. The planets that correspond to the other markets we're sort of taking a vacation. There's nothing really big happening until the latter part of the month. So I thought I would go over the stock market because it responds to lots of different things versus the commodities tend to be a narrow filter,
Okay.
So let's talk about on page 1 here. We have the top things I talked about last time. There were 3 in my top forecasting planetary events are what are called station points. Station points are due to the relative motion of the Earth to the other planets. It appears, that's the key word, it appears that if you were to plot the planets in the night sky every night, that individually the planets look like they stop their motion and then reverse their direction. When they stop momentarily, that's called a station point. Then they turn to either go forward, which is called direct, or backwards, which is called retrograde. We had 3 of these last month, starting, I included the last couple days of August in my September letters. So we had Mercury, you might remember we had Mercury turning retrograde the night of the 29th, early wee hours of the 30th. And I marked those points here on my chart. And you can see if you sold here on the red arrow, you could have made some money. We went down for a few days. What's that?
Didn't we have Mercury going retrograde back on May the 19th of last year? That was the major high for the.
That was the high of the year. That was the high of the year.
Yes, I remember, and also it was within about 15 minutes of the exact time, as I recall.
Well, it depends upon if you look at the Dow Jones, the S&P. S&P actually topped the following night in the like 3 in the morning, on the 20th.
Okay.
But that wasn't just any retrograde. It also corresponded to having a senior moment here, Larry. We were at a new moon, I think. We had Mercury retrograde corresponding within 1 day of a new moon. That's kind of a rare event. You and I went back and researched that. And one of the dates I found in the past was October the 11th, 2007. I bet you remember that day, right, Larry?
Oh, yes, I certainly do.
That was the top before the killer bear market,
Yes.
Yep. Anyway, so we had something sort of that flavor, shall we say, when we got here to the 21st, when we had Mercury. Mercury goes retrograde about 3 times a year, and that it's retrograde for on average, about 21 days. So then we get to the 22nd of September, which, as you pointed out on your show several times, was also the autumnal equinox. And when the sun changes signs, goes into Libra, and it's also the beginning of the beginning of fall. That's right. I had to get my season straight. And so you can see the red arrow there on the chart. If you sold there, I think you could have made some money. Right?
Yep.
By the way, in case you don't know my lingo here, I got AC on these dates. That means that it happened after the close. Okay, so it's basically overnight into the next day's opening. So then we went down, and then my biggest, what I consider my biggest, most powerful window of the month was the 26th. We had the weekend of the 23rd, when we had Pluto turn direct over the weekend into Monday's opening. We also had Venus provide a little kicker when it got to 0 south latitude, and there's the red arrow for that. You can see you're at a nice low there, and if you bought there, I think you could have made some money. What do you think, Larry?
Yeah, well, it's a good spot. There's no question about that. It had a nice pattern there also.
There you go. So now that's sort of get the people warmed up to getting used to looking at the stuff in my charts. That's the sort of the top, very top stuff we had last month, and they marked on the chart. Now we're going to get, here's what I reviewed in my letter for September with all the dates. I have several different techniques I use. I do market math. That's sort of a Gann thing where, if you have 144 days, for example, that's both 12 squared and a Fibonacci number. So that's kind of a magic number. And I go, there's no limit to how far you can go out. I think recently I had from a past historical turning point, 57 squared, whatever the number that is, comes out to. So square numbers are big in the Gann world, and Fibonacci numbers, Lucas numbers, all that sort of thing. So key mathematical harmonics. That pointed hit 2 out of 3 on those. Here I do Fibonacci time cycles, and on that I'm going to show you this model here in a few minutes. And I hit 5 out of 6 on my Fibonacci time cycle models for 83%. And then we had our astro dates. I hit 5 out of 7 for 71. I mark them. What I do is I have these dates a month in advance. Then after the fact, I mark them on the S&P chart here. and there's a legend here telling what all these different markings are. And then I add them up. Here's a miss. These are all winners. Here's the high of the month within a day, I think. Here's the low of the month. And so I had all those dates, and that came out pretty good. Overall, I did 12 out of 16 for 75%.
That's a very good figure.
Thank you. Larry, you might know that guy. He just got in the stocks. Okay. All right. Anyway, so that's how I do it. And so I'm going to show you some of these models here in a moment. Here we go. Here's our Fibonacci for September. I have 4 Fibonacci time cycle models, and those are the 4 blue dotted lines on this page. And here's how simple this is. Once I get these on the page, all you have to do is look for where we have 2 or more of these blue dotted lines changing trend at the same time. Here we have, I think we had one, let's see, I think we had one right there, and we had a little bit of we had a bottom, like within a day, right there, boom. I think we have one over here. Oh yeah, here's a nice one here lined up with the planets. We had a top there, a bottom there. That's 2 lines changing trend, and that corresponded to that September 26, 27 low, So that's how we do that. So that's how I generate those dates that you see back here. I think, you'll see them. I'm going to show you my future dates here in a few minutes. So there's the chart for the results for September. And then we're moving on. Here's October. Okay, here's your October chart.
This is chart 4, right?
We're on page 4, right?
Oh, good. Okay.
So now we're going to look ahead into October where we might have some of these Fibonacci dates, and where we're looking for where we have 2 or more blue dotted lines changing trend at the same time. Look at that. There's a low there for that day. Here's a high there for that day. So we have 2 lines changing trend, harmonic convergence right around the 20th of the month of October. So we'll be watching. That'll be one of the dates. We'll be watching for a change in trend at that time. Okay.
Okay.
And if you're, don't want to look at these charts, I do the executive summary in the front of my letter every month, so you don't even have to look at the charts. But if you're like me, want to know where these answers are coming from, then you might want to look at the charts, All right, here's my calendar. I only got a portion of my calendar on here. Actually, I have 2 pages of this sort of thing, and we're covering about 30 markets, but I thought I'd give you a little sample here. Here's the bottom half of the
page 5, correct?
Now we're on page 5. That's it, okay. Larry. We're on page 5. And okay. So here's how you read this now. It's real simple. Basically, you have these X's here are marking change in trend points, and the bigger the X, the bigger the number, the bigger the change in trend. So we're due to have a change in trend for oil right now, and either it's going to work or it's not going to work. Look like on your chart there, you might be up against some resistance. Did I read that chart right?
Yep. We got to take a break here, my friend.
Right.
Stay with us, and we'll be right back, okay?
Yes, sir.
You bet.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're on with our friend Norm Winsky from Astro Trend. Norm, I wanted to say one thing to you today. Shana Tova.
Well, thank you.
Happy New Year. Listen, the question that I have for you is this. On your Astro Trend key date calendar, you've got a number. You've got a number underneath the X's, like 8, 16, 12, and 40.
Right.
What are those numbers?
Those are energy numbers. The higher, the bigger the number, the bigger the energy, the bigger the potential change in trend. So I was talking about crude oil, that we are on the line here for the 6th. The line is overnight between the 5th and the 6th overnight. We also have columns. I'm not going to get into that today. If you want to, if the folks call me up, I'll tell you how we can also subdivide the day and can tell you whether something's likely to happen in the morning or in the afternoon, that sort of thing. But when we're on the line, that's overnight. And we're due for a change in trend in crude oil now. It's and you're up against. I think you showed on your chart you're up against some resistance, so you have a potential trade here where you could sell against that resistance. And if it takes out that by any substantial amount, then you get out and cut your losses. Otherwise, you might have a good trade. Mm-hmm. Now the scan. Here's how easy this is to use. Scan across the oil line here, and what's the big number that pops up? Right 16. There. Boom. The 40 over the weekend of the 14th, right?
Yeah.
For the 17th, Monday, this is the weekend on the line there. You're on the weekend between the 14th.
You can see the 14th has got 76, 66, 46. I mean, that's a huge
you're
thing.
down on another line then. I'm looking at crude oil. Right?
Well, I know that, but what I did is I'm just looking at the numbers, because the numbers are what I like to see. Statistics, and then in the body of the letter, you're talking about we have this Syzygy coming up. With a full. Oh yeah,
I'm going to talk about that in a minute. But I just
I'm sorry. You're my guest. Continue, please.
All right. Well, we're going to get to that in a minute, Larry. So anyway, we have the calendar here, and all you got to do is look at the numbers and see where the action is likely to be. So you don't have to be watching these markets every day. You can. This is like an opportunity finder for you, to tell you when to look at the particular markets. Let's go look at the stock market. So the big number here for the stock market is the same weekend as the crude oil, the weekend of the 14th, the 17th. And we're going to get to the lunar syzygy here in a minute. That's happening over that weekend, okay? So that it's all going to come together here in a minute. Here's another huge, big day here, is around the 27th. So we have the weekend of the 14th, and then late in the month, and then the huge number at the very end of the month, too, on the after the close of the 28th. Okay, so that's how we use the calendar, and there we go. So now I'm going to go down below the calendar here, where I have some of the forecast for the stock market that I took out of my letter here, and you notice that I said that we're going to have a turn right around about the 5th, and then kind of chop around, and then if we get a rally, if we get a move next week, we're looking for the big turn of the month is likely to be right around the 13th, 14th of the month. And that weekend, it will be a full moon, a perigee. This occurs about every 421 days average. That's about 14 months. And you might remember we had a combination of that with a lunar eclipse last September. And then we came in on Monday. That was over the weekend, Sunday night. And when we came in on Monday, the Dow gapped down 300 points. Well, that had an extra kicker on it. That was a lunar eclipse with the full moon at perigee. But the full moon, new moon, everybody knows about that, 29.5 days. What some people may not be aware of is that the moon does not go around the Earth in a circle. It's more elliptical. And so therefore there's a point at which the moon is closer and a point at which the moon is farthest. And that's called perigee and apogee. Perigee is near, apogee is far. And when they line up with a full moon, you can imagine if you get a full moon at perigee, you got a full moon near the Earth, and that's going to be additional gravitational pull on the Earth. So that's often in not just terms of the market, but you often get flooding in coastal areas, and sometimes it'll trigger earthquakes, and all kinds of things can happen around that period of time. Okay, this technical term is called a syzygy. If you're a Scrabble player, you might want to write that down. You can win the game with one word, with the word syzygy, because it's got a bunch of Y's and Z's in it, and that's be a great Scrabble word. But it's in pop culture, they call it a supermoon. So you can Google those terms and read about them. But that's big. The 14th, right around the 14th, is going to be the big change in trend window, I believe, of the month. So there I have my dates now. Now you know where these come from. There's my astro dates, and it come right off the calendar. I take the top dates off the calendar and use those when I write the forecast for the letter. There's my Fibonacci dates. I get those off the Fibonacci chart I showed you. And that's how I do it. Okay, there's your dates there for the coming month. Okay, and here's one more forecast model I have. I do fractals. I take a look at the January price action and project out in the future. I had these blue bars published in February, and it said that the big date of the entire year was mid-August, right around the 15th of August. Well, you might remember, Larry, that the high of the year so far was the 15th of August, right?
Yes.
I had this forecast from February, 6 months in advance. And you might remember when I came on your show in early August, I also said Saturn was going, I think, was it direct or retrograde, I forget which one, over that weekend. That's the station point. And that also helped nail the high on the 15th. So anyway, this model, if it continues to follow this model, and it's so far so good, it says we're going to kind of gradually work our way lower into the end of the year.
Mm-hmm. Makes good sense. Okay, we have a question. I know it's not related to this chart, but we were talking about the birth charts of the Republican candidate and also the Democratic candidate. What is your feeling on how it's going to look come election time? Because we're going to ask you again in November, of course. But what do you see right now as far as what the charts look like for the two candidates?
Okay, I have a low confidence level on this. I have because as you discussed with Bill yesterday, the birth time for Hillary's chart is disputed, and I have great respect for Bill, but the chart that he showed there, I don't think fits her life. I don't think it fits her career, and so I'm skeptical about that too. He got it from the database that a lot of people use, Lois Rodin's Astro database there, and a long time ago. But I don't think it fits her personality. I don't think it fits her, so I'm skeptical about that. And the chart, I'm not going to get into that. Anyway, for purposes of my letter about a month ago, I picked that Trump would win by a slim margin, but also warned that don't bet any money on it. In the past, my record is since I started astrology in the early '70s. I've hit 8 out of 10. I had a perfect record until Mr. Obama came along, and I missed twice with him. So he's been my downfall, So I'm now at 8 out of 10. Maybe after this one, I'll be 7 out of 11. I guess, I don't know.
Yeah, I will say no more. My lips are sealed.
Anyway, so this is I think a lot more interesting because you can make some money on this. So there you go. So here's my different forecasting models I showed you. And my whole orientation is because I was a floor trader for 12 years. I was on the floor. Everything has to come down to how can we make some money with this stuff, right? So that's my orientation. So it has to have some kind of practical application. I think theoretical research is great, but sooner or later, you got to come up with some way to make some money.
We got to take a break here. We got to take a break here, and we'll be right back, okay?
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with our friend Norm Winsky from Astro Trend. Norm, before I give you a few minutes here to let the folks know what you can do for them in some of the things that you're working with, I would like to ask you a question, and that is, I've heard from many years ago from a guy named Ira Epstein, who used to be having a TV show in Chicago up at the Board of Trade, up where the Ceres statue was. Bill Griffith asked me to be a guest on his show back in 1987, and Ira said that there was a Hebrew cycle, so buy on Rosh Hashanah and sell on Yom Kippur. Have you ever looked at that cycle?
Yeah, and if you Google it, half the things say buy Rosh Hashanah, sell Yom Kippur, and then the other half says just the opposite. So, yeah. I just look for a change in trend around those dates, obviously.
Yeah, because it's a lunar cycle, isn't it? As I recall, it's out of the Hebrew Bible.
The Hebrew calendar is a lunar calendar, and I think it's more accurate just to look at the fact we're going to have a full moon at perigee coming up on the weekend of the 14th. Yom Kippur.
Yeah.
It falls a couple days before that, so there you go.
Yeah. Okay. One other question.
So
Why don't you tell us? There you go. You got it. Keep going.
Free stuff. So anyway, I'm going to tell the folks how to get some free stuff. By the way, if you haven't heard me on here before, I have over 40 years of experience. I'm a former Chicago floor trader. I've been doing this Astro stuff for 45 years and so forth. So I have a little bit of experience, and hopefully I know what I'm doing. And so you can get my letter for free, the current letter, October letter for free, and also get a free class. You have to take the class so you'll learn what we do. We did the 3-minute version of the class, which is several hours to go through here and go into detail, and you're going to get almost the equivalent of like a trader's college education in several hours. I'm going to teach you advanced Fibonacci, GAN techniques, all kinds of things, and I think you'll almost. I haven't had anybody. It's all free with a money back guarantee, and I haven't had anybody ask for their money back yet, so it's a pretty good deal. And so anyway, you can get the letter. Here's how you get a hold of me. 239-594-3939. My email is nwinsky at embark, EMBARQMAIL.com, and Skype, you can get me at norm.winski, norm.winski. Get the free letter, the free class. It's individual. Please call me right away because I only have a few days when I can do this.
Thank you, my friend.
For that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.